Hey everyone, welcome back. So today is Tuesday. Obviously we didn't do a video yesterday. It was my mom's birthday, so we had a birthday party for her and got home late, didn't have time to record a video. So obviously yesterday we were down. Today we are down again. It's been a brutal 2 days here. Tesla was down like 12% today. Other stocks have been down. It's not looking great in the markets right now, especially in the NASDAQ. But Bitcoin obviously is following suit as well, unfortunately, and so are the miners are down as well. So we'll take a look at the miners obviously today, see how they did, and yesterday basically, but they're down. We'll take a look at Bitcoin, Ethereum. We'll take a look at some other things as well, possibly look at Cleanspark news, Bitfarms article, and Texas, first city going to be mining Bitcoin. So we'll take a look at all that. But as always, not financial advice. You know the drill here. I'm investing in following coins and companies. And let's get into the miners here really quick. So Annie is down to $1.50. It did reach a new low today, it looks like, of $1.47 here. So it was down 8.54% on the day. Argo was down 5.96 today to 74 cents. It's still not at the bottom here at 66 cents that we had back on 315. Digital was down 8.7% to $2.10. It is now basically showing a new low here if we go far enough out. So obviously the miners are getting pummeled like crazy. Bitfarms was down 6.73% to $2.77. It has, I mean, we're getting really, really close to that low here. We're obviously going to have to see how things play out tomorrow. Cleanspark was down 10.66% to $7.04. It is still not at the low here of $5.47. Cores was down 3.8% to $6.07. So it's getting pretty close to that bottom here at $5.82. Digihost was down 4.12% to $2.56. It is getting close to that bottom also as well here. That was back on 314. And then DMG was down 5.08% to 39 cents. And it is also getting very close to that bottom here, reached on 224. Then we got Hive. Hive was down 6.55% to $1.57, and it is getting also very close to that bottom it reached on January 24th. Hut 8 is down 9.44% to $3.55, and it is at a very new bottom here as well, which isn't good. Iris Energy is down 10.31% to $10.09. It's still a little ways off from its bottom here. And Luxxfolio is down 4.95% to 221 cents. So it is getting very close to that bottom it reached here on April 8th. Marathon was down 8.65% to $17.10. And it is a new low for it here. If we look far enough back, it hasn't been that low for quite some time here. And Mawson was down 0.76% to $3.92. And the previous low here looks like it was $2. This was way back in August of last year. And then Riot reached a new low here at 10.97. It is at 11.08 right now, so it was down 7.97%. So all the miners are obviously down. Like I keep saying, Bitcoin goes down a couple percent. These guys go down 5-10%, it seems like. But that's the same thing when Bitcoin goes up. So let's take a look at Bitcoin here, see what it's doing right now. We're looking on the, let's go to the daily chart here. We came pretty close to hitting our support here at 37,500 on the line here. We are now at 37,900. We are down 6.2% on the day, which isn't obviously good. We did reach the bottom part of the 20-day moving average here on the chart, which is the red line here. We did touch it, and then we obviously came down following it, which wasn't good. We had a pretty good day yesterday in Bitcoin and also Dogecoin. If we look at it really quick, Doge had just a crazy day yesterday because excuse me, of the announcement that Elon Musk is going to be obviously buying Twitter. So a lot of people were hyping that for Doge. But going back to Bitcoin, so that was obviously hyped as well with that news of Elon buying Twitter. And then obviously today we've just fallen like crazy, which isn't obviously good. And let's take a look at Ethereum here as well. So Ethereum did the same thing. It touched the 50-day moving average on the green chart here and came back falling down. So Ethereum is down 7.43% on the day, which doesn't look good. We are getting a low RSI of 36 on it. And if we look on the 1 hour chart on it, we can see that we are overbought or oversold. Sorry, we're oversold on Ethereum, and I believe we were also way oversold on Bitcoin. Yeah, we're below the 30 mark here on the RSI. So we are oversold. We'll see if we have a little bounce here happening, but I think we may come down and test this 37,500 before that happens. Obviously, we also had some news come out for earnings for Google, which weren't, I mean, they were great, but they missed estimates, and so did Microsoft. So those two are obviously on the down today. I don't have them in here, but I was looking at them earlier. So that's also happening right now. And then we got also, I think, Apple reporting, and Amazon is also going to be reporting later on this week. So we'll see what those numbers come out looking like for them. All right, so let's take a look at Cleanspark news here really quick. They provided it today. So Cleanspark today announced that it has finalized $35 million in non-dilutive financing from Trinity Capital, a provider of venture debt financing. The 3-year equipment financing agreement is backed by 3,336 new S19J Pro miners and carries an annual interest rate of 9.9%. Cleanspark intends to use the proceeds from the facility for growth expenditures. And as mentioned in our Q1 earnings call, debt capital is currently the lowest cost of capital available to the company, said Gary V, CFO of Cleanspark. This non-dilutive facility is an example of us delivering on our capital strategy and the expectations we have previously communicated. We intend to continue our efforts of obtaining non-dilutive capital to finance our growth CapEx needs. It is worth noting that we have not drawn on our ATM since November. So that is great news. One of the concerns that we have with the miners is dilution of the shares, because they're gonna, get an ATM. They're gonna get, just introduce more shares to basically fund their operations, fund their growth, and that's one of the reasons why I really like Cleanspark, is because they are very mindful of that, of not diluting the shares of the shareholders. Are using, debt capital here, and they're also obviously selling their Bitcoins to fund operations. So this is great news to me. So congrats to those guys for getting that, and that obviously is going to help them continue their growth. And then we have the city of Fort Worth votes in favor of Bitcoin mining program. So we are going to become the first city in the world to mine Bitcoin here on site at City Hall, said Fort Worth Mayor Maddie Parker. So Fort Worth, Texas has launched a pilot program to mine Bitcoin in partnership with the Texas Blockchain Council. Obviously, we know that Texas is the hub for mining right now, Bitcoin. In a Tuesday City Council meeting, Fort Worth approved a resolution to start running 3 Antminer S9 Bitcoin miners donated by the Texas Blockchain Council in the City Hall. But those are the old generation. Those are 13.9 terahash miners. They run at about 1,300 watts on those. So they're not the most efficient, but they are obviously probably the least expensive to donate. The pilot program was aimed at recognizing the exponential growth of the blockchain and cryptocurrency industries, in addition to encouraging Fort Worth to become a tech leader. So, according to the city, each BTC miner will use the same amount of energy as a household vacuum cleaner, with costs expected to be offset by the mined crypto. Carlo Capu, Deputy Chief of Staff for the Fort Worth Mayor and Council Office, told Cointelegraph the 3 rigs were expected to mine roughly 0.06 BTC annually. That's about $2,353, with the price of Bitcoin at $39,215 at the time of this publication. The pilot was designed to be limited in both the number of machines and duration. To learn the potential impact and opportunities for Bitcoin, the city will evaluate the program after 6 months. Starting in October, Capua said the program would be considered based on the amount of BTC mined, the amount of energy used, and the public awareness of tech and crypto in Fort Worth. So obviously, those S9 miners are not the most efficient, so they're not obviously going to be mining the most coins, and watts per, I guess would be watts per terahash is pretty low on those as well. In a quote here, so in this rapidly evolving industry, better understanding, number 1, the evolution of crypto and future outlook. Number 2, what institutional voids might exist in the market, laws and regulations. And 3, how government and municipalities interact with this technology. I think that those are all good things to work on. By starting small to learn as they go, Fort Worth is positioning itself to be a Bitcoin mining capital of Texas, said Lee Bratcher, President and founder of the Texas Blockchain Council. The state as a whole has already established itself as a Bitcoin mining capital of the world. And at the City Council meeting, Fort Worth resident Thomas T. suggested tabling the measure, citing environmental concerns over mining as well as potential legal issues over adopting digital currencies. He likened the program to a Ponzi scheme and questioned private businesses donating materials to advance their agenda. Obviously, this gentleman still could use some education on how everything works with Bitcoin mining, everything. It's not a Ponzi scheme. I know a lot of people like to call it a Ponzi scheme, but it is not. And just wanted to point that out to you. So I think it's kind of cool. Obviously, cities, we're seeing more cities get into Bitcoin, whether it's Bitcoin payments for taxes and things like that. So adoption, we're getting more adoption. The more people learn about it, I think the better off we're all going to be in the long run. And finally, we got this story here. So I thought this was kind of cool story, and it kind of coincides with exactly what I think. So Bitcoin versus BTC miner stocks. Bitfarms mining chief explains key differences. So direct BTC purchases and Bitcoin mining stock investments are two fundamentally different investment strategies to suit different people and interests. Ben G says, and I agree with him. So Ben G, chief mining officer, I'm going to say Ben G because I'm going to be probably pronouncing his name wrong, and I don't want to do that. So Ben G, chief mining officer of the major Bitcoin mining company Bitfarms, believes that the direct BTC investment and exposure to BTC mining stocks are two fundamentally different investment strategies to suit different people and interests. I kind of agree with that, but I also kind of don't disagree with it, or kind of disagree with it a little bit, but we'll get into it. So a direct investment in Bitcoin is a simple, long-term investment suitable for the vast majority of people. Okay, this is the part that I would agree with him. The other part I kind of don't agree with it is that obviously investing in Bitcoin for the long term is advisable for most people. You buy it or you dollar cost average into it and you don't worry about it. But there are obviously people that are traders that enjoy the high volatility that Bitcoin gives them. We have huge spikes and huge drops as well. And they can obviously make money that way. They can go long in it. They can leverage. They can do other things with it. So it is also for the professional trader and for regular people that just want to invest in it for the long term, 5, 10 years out, whatever it's going to be. So that's kind of my difference on that. On the other hand, investing in public traded BTC miners is much more sophisticated strategy. The executive noted for sophisticated investors who are looking for liquid exposure to Bitcoin in their traditional stock portfolio, publicly traded miners are one of the best ways to do that. And I think this is also one of those things where you don't have to be a sophisticated investor. I think you can be just a long-term investor and buy in on the dips. But there's obviously a benefit to getting into the miners as well. And he's going to point this out here shortly. So the CMO went on to say that the primary value of Bitcoin miners stems from the value of BTC they mine and generate as cash flow over time, adding, when Bitcoin goes up, the miners should go up more. When Bitcoin goes down, the miners should go down more. And that is exactly what we're seeing in the market. So during that whole boom that we had last year, where we went up to 67,000 or 63,000, came back down, went back up to 67,000, the miners at that time were going up 40, 50, 60, 70% up in value, while Bitcoin was only going up basically 30, 40%, whatever it was, or they're going up 200%, the miners. So there's always it's kind of hard to time the market, but I think if you can dollar cost average in when everything's going down, buy more of the stocks, you're going to be doing, when Bitcoin does finally go back up, you're going to be doing really well with the miners because they are going to go up more than Bitcoin is. But the same can be said of when Bitcoin goes down, you're going to be losing a lot more. So there's always trade-offs with it, right? Benji's remarks come amid some big BTC mining stocks recording a significantly bigger slump compared with major cryptocurrencies such as Bitcoin and Ethereum. So Riot Blockchain, one of the world's largest Bitcoin mining companies, has seen its stock drop 45% year to date. We talked about this on, Sunday's video. We went over how, Riot has just been gotten beaten up over the last couple months here. So now they're trading slightly above $12 during pre-market trading at the time of writing. And another public crypto miner, Hut 8 Mining, plummeted more than 50% year to date. The Bitfarms stock tumbled around 41% over the same time period. In the meantime, the price of Bitcoin and Ethereum have decreased 15 and 20% respectively since January 1st, 2022, according to data from CoinGecko. So you're seeing this 15-20% for the crypto coins, while the miners have obviously went 2 times that, 1.5 times that of that decrease. But the same correlation of Bitcoin's price of BTC mining stocks worked in another direction last year, as BTC was on the way to hitting all-time highs above 68,000 amid a massive crypto rally in 2021. Bitcoin mining stocks were massively outperforming the general crypto market. As previously reported by Cointelegraph, BTC mining stocks outstripped BTC by as much as 455% over a 1-year period in March last year. All right, so we've obviously seen that happen, where we've had huge gains in a lot of the mining companies that were around, like Hive, Hut 8, some of the other ones as well that were around, Riot, Mara. I mean, things were just going gangbusters for them when Bitcoin was going up. So the value of Bitcoin is not the sole trigger affecting the value of Bitcoin mining stocks. According to Bitfarms mining executive, Benji pointed out 5 major aspects to evaluate any public miner. So he's talking about including the amount owned of BTC, how much they're currently mining, their volume, the cost of the mining, obviously, and the expansion investments in future mining plans. So let's break this down. So including the amount owned BTC. So how much do they actually hodl right now? We're seeing that have an effect on some of the stocks. How much they're currently basically mining. Are they increasing their mining month over month? And then obviously the cost of mining, which I don't really cover too much. I look more at the gross revenue. And then the expansion, obviously investment. How high is their hash rate going to be in X amount of years, whatever, 6 months, 12 months, 18 months, 24 months, whatever that is, obviously plays a role in it as well. We're seeing that companies that do have that higher hash rate growth in the future tend to usually get a higher multiple, price earnings multiple with those companies. So that's one thing that's also driving them as well. So that's it. I just wanted to point this out to you guys. We'll obviously have to see how the market does going forward this week, but it's going to be a tough week. It's the last week in April. I remember when April was starting out, we looked at Bitcoin's historical trend in April and it was green. It doesn't look like it's going to be in the green right now. We've had 4 weeks in the red now, and we might have a 5th week in the red here. So we'll see how that plays out. Unfortunately, it doesn't look like it's going to be green, like I said, but we'll see how March or May is. Some people are saying that May could be even worse because, sell in May and go away mentality for summer vacations, and then people start coming back into the market back in August and September. So it's going to be a fun time. But at least the month is ending this week, and then we'll get some more data from the miners as far as what they were able to mine this month. So that's it. If you guys enjoyed it, obviously hit the like button and subscribe. Helps me out tremendously. And that's all I have for you guys. Hope you guys enjoyed it. Thank you so much for watching. I'll see you guys in the next one. Until then, bye.